Good afternoon, ladies and gentlemen, and welcome to the Good Energy Group PLC Interim Results Investor Presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged. They can be submitted at any time via the Q&A tab that's just situated on the right-hand corner of your screen. Please just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and will publish those responses where it is appropriate to do so. Before we begin, as usual, we would just like to submit the following poll, and if you could give that your kind attention, I'm sure the company would be most grateful. And I would now like to hand you over to the executive management team from Good Energy. Nigel, Rupert, good afternoon.
Good afternoon, Jake. Thank you very much. I should sort of introduce us as part of the executive management team of Good Energy. Our colleague Fran Woodward isn't with us today. But for those of you who are new to these meetings, I'm Nigel Pocklington, I'm the company's Chief Executive, and I'm joined by Rupert Sanderson, our CFO.
Hello, everybody.
Right. So this is a presentation just to summarise our results for the first 6 months of the calendar year and update shareholders as to the progress in the transformation of Good Energy that has been underway for the last couple of years. I don't normally linger on the title page, but I think it's worth it on this occasion. That is actually a Good Energy installation team at work in Good Energy branded equipment. So they're from Good Energy Solar, and they're installing solar panels on the roof of the Sea Life Centre in Great Yarmouth. And I think a very good visual image, really, of the transformation in the nature of our business over the last couple of years and the type of customer whom we are now attracting. So, in terms of what to expect, after a couple of summary thoughts from me, I'm going to hand over to Rupert, and then I will take up the reins again and give you an update as to our strategic progress. The whole presentation has fewer than 20 slides in it, so that should therefore allow plenty of time at the end of the meeting for Q&A. And as usual, you can leave questions on the tab on the side of the screen. So, a couple of overall or summary thoughts. First of which, frankly, is I want to stress the significant change in the nature of Good Energy's business over the last couple of years. So after the sale of our generation assets in early 2022, we have transformed and strengthened our balance sheet with additional cash to invest, which has been supplemented by a vendor placing. And the business is in a very different shape to the one that it was in 3 or so years ago. And really, we have 4 areas of the business now. Firstly, we remain a supplier of 100% renewable electricity and a green gas proposition. We are one of the very few suppliers derogated from the price cap in the UK because of our direct support for over 2,500 small generators who provide the power which we bring to the retail market. We are widely regarded by a lot of third-party accreditations as offering both a very green product. We are 3 times Which magazine's Eco Supplier of the Year in the UK, but also by Trustpilot as offering 5-star customer service. So we have a distinctive and niche supply proposition which is popular with green-motivated consumers and businesses. Whilst I would freely accept that we are a niche operator in the supply market, we are a significant player in the world of micro-generation. We reach more than 180,000 customers in this area, either through our administration of the feed-in tariff scheme or through the successor schemes, which we support for people who didn't qualify for FIT. In general, whilst we have a very small market share in supply terms, we speak for about 1/5 of the UK's micro-generators. We are fast growing an installation services capability, which at the moment covers the south of England. And we are focusing on installing a premium quality solar storage, heat, and potentially even EV charging proposition really across the south, with aspirations to keep growing that business. That business very much faces into both a significant trend in terms of consumer demand and increasingly in terms of government policy in the UK. And then lastly, through our investment in ZapMap and other product innovation, we are a significant supporter of the electrification of transport in the UK. So if that is how to think about the business, how should we think about the first half of this year? I I think there are three highlights I wanted to call out. The first is that Rupert will explain in a moment some of the year-on-year comparator issues with the first half of 2023, but 2024 marks a return to some sort of normality in at least the seasonal profile of the business. I'd be the first to acknowledge that power prices are painfully stuck in a higher place than they were 3 or 4 years ago, but we have a less volatile and more normalised market in which we have made a strong and profitable start to the year, and the board is very clear in reiterating the fact that the business is on track for our full year guidance. We've seen a significant expansion in our capabilities as an installer, mostly through the acquisition of JPS Renewables in Kent in the first 3 months of the year. And we are innovating both in terms of our work with the feed-in tariff, but in subsequent products to cement the Green Energy's overall position as the UK's micro-generation champion. So with that summary, I'll hand over to Rupert, who can explain the first half's financials.
Thank you, Nigel. I wanted to start with just sort of a bit of context in terms of where the P&L result is for the first half of 24. And here we've got the last 24 months through the back end of 22 through to the end of June of 24. Characterised certainly the 18 months during 22 and 23, very volatile in terms of the geopolitical tensions and the energy crisis that the UK and a number of other countries endured. And just in terms of sort of graphic here, there's two principal data points. The first is the blue bars represent a sort of average cost of input power and gas into our portfolio, and the yellow line is a representation of the sort of tariffs that we are charging to our customers. The picture here will be quite consistent with how other energy companies would have reported, particularly in the first half of 2023. But the lead up to that was that commodity prices were rising very sharply through the back end of 2022, and tariffs were taking some time to catch up with those very sharp rises in commodity costs. The reverse then happened in the first half of 23, and I think all energy companies in the UK would have reported quite similar results, where the sort of margin expansion was quite significant, as then commodity prices started to fall relatively sharply, but tariffs remained high. And then the third point is the conversation that I think I probably touched on in March when we did our full year results. The way in which we procure power and gas is generally over a sort of 12-month season, and the majority of those contracts are through sort of October to September. So particularly in Q3 of last year, we had the final tranche, so to speak, of those high-priced power and gas contracts, but we had reduced our tariffs significantly because we saw the competitive environment and we had the benefit of that first half. So the 18 months preceding this period in question are quite unusual, and a lot of extremes, a lot of volatility. And as Nigel said, this first half of the year is much more normal. We have seen a greater stability between the commodity prices and the pricing environment out in the marketplace. So move on.
Thanks, Rupert.
And again, just in terms of the context for this, so in Q1 of 24 compared to the Q1 of 23, retail tariffs are nearly half or a little under half of where they were. So there's a very significant price movement. And we have had some reduction in the size of our commercial portfolio. Those two items combined have driven a near 40% reduction in turnover, but a almost identically corresponding reduction in cost of sales. And so it's in that more normal environment that we report gross profit and profitability for the first half of the year. And in reporting the profits for the first half of this year, they're a little over 75% of our full year profit in 2023. So as Nigel said, the majority of our profit being delivered in the first half of the year, we are expecting a second half of profitability, and therefore we're maintaining our full year guidance today. This is a more simple representation, I think, than we've had in previous years. So the bridge of half one profits year on year. We touched on the volume reduction, particularly in the commercial segment, but the vast majority of the movement relates to that commodity and tariff normalisation that we have seen in the first half of 24 compared to the first half of 23. On cash, we've had a very strong performance on cash. The business is cash generative, so about £6 million worth of operating cash flow. And it is more comparable actually with full year 23 than would appear from the page. A number of you again will remember in March we talked about a build-up of credit balances, particularly within our domestic portfolio, as those tariffs fell off quite sharply during the second half of 23. And we increased the level of customer credit balances by nearly 7 million in the second half of 2023. And then we have done what, again, we talked about in March, which was to proactively return customers' credit balances where we felt that they were too high and they weren't going to be utilised by consumption in the future months. And so we've actually seen that customer credit balance fall back again by almost exactly as much as they went up in the second half of 2023. Just in terms of the other things to call out, we have made the acquisition of JPS in the first half of the year, a purchase of £7 million, 5 million funded by cash, a little over 2 million funded by a vendor placing, and we've made a further investment into the ZapMap business, which Nigel will update performance on as we go through the presentation. And finally, just a consistent view of how we consider our capital allocation. So the business remains in very strong financial health. With a small amount of debt, the company has got net cash at the end of June of £34 million. We have again talked about seeking further opportunities, inorganic M&A opportunities to expand our energy services footprint and capabilities, as well as invest in our own internal capabilities to support solar propositions. And again, just in terms of the confidence in our full year outlook, we are making a 10% increase in our interim dividend, and we'll be making a payment of 1.1 pence per share. I'll hand back to Nigel. Thank you.
Thank you, Rupert. So that's a summary of the first half financials in a more normal profile for an energy company, although albeit the comparator to 2023 still distorted by the gas price crisis of the last few years. Strategically, how are we doing? Well, if you have been following our story, you will know that our essential strategy is that we are investing to build a significant green energy services capability to sit alongside our renewable supply proposition, because we see that as being both an important way of delivering on Good Energy's founding mission around decentralising growth and helping people become their own power stations and clean power users, but also because we think there is a substantial business opportunity behind markets which are likely to grow structurally through the rest of the decade in the UK. So it does start with, what gave us our brand in the first place, which is our supply business. And it has been, I think, a positive first half of the year for us as a supplier. Just as a reminder to investors, we regard the supply business as something we can grow in a sustainable, sort of mid-single digit margin profitable way. And we run it to make sure that it is run in a particularly stable way so that we've been able to navigate the last few years. Highlights here. Well, the first one is that the price cap regime, which had started in 2019, actually formally came to an end in 2023. The regulator and government chose to then roll it on, pending decisions around where we're eventually going as a country. But it meant that Good Energy's derogation from the cap had to be reviewed by the regulator on an annual basis. The regulator reviews our pricing practices and making sure that we are being clear with customers that they are taking on what is a differentiated and different product to the market norm. And our direct support to renewable generators and green gas producers from those tariffs. And happy to say that after a detailed exchange with the regulator, they acknowledged and have publicly said that we stuck by our side of the derogation bargain. during that period. So we have a good stamp from the regulator that what we are doing is different to the market norm. It's not just the regulator, several trusted third-party bodies continue to credit us with strong environmental performance, and use, and also high levels of customer service. That's our own customers accrediting us with that. We are one of only 2 suppliers with a 5-star rating on Trustpilot. We've had that rating for most of the last year. There's been some innovation in this side of the business as well, particularly on the B2B side. So with the larger business customers who consume power often settled on a half-hourly basis in their billing, we're able now to offer a matching product. So on an hourly basis, we can inform our larger customers the proportion of their consumption that is being matched then and there by renewables. We very much think that is a gold standard for linking tariffs to actual renewable generation. And that our argument would be that is now past the existing REGO system as a way of branding power as genuinely green power. And then we are continuing to push for further efficiency in this business. We have been operating 2 billing platforms, one for domestic and one for larger customers. We are consolidating down onto the single one. Kraken project is underway now and should finish by the end of the year. I think what has changed is that the policy environment we are working in is a changed one with the change in government in the UK. And some of the details, or many of the details, I should say, are still to come out. But I think I read the early months of this government as being one that looks likely to be more stable and sensitive in terms of its treatment of energy policy, and the central argument that renewables are part of the solution and not the problem for the UK's energy security and energy prices, but also that the policy agenda is one that should provide us with a helpful tailwind. There are some headlines there which we've noticed over the last few weeks. Obviously, a lot of attention on the lifting of the de facto ban on onshore wind generation. We are looking to find more about what the government is now going to do in terms of heat pump incentives and support for smaller scale solar generation. They were gathering headlines a few weeks ago. We're talking about the need for a rooftop revolution, particularly in the southeast, which they regard as a strategically important area for this. But certainly, if the government is going to get anywhere near its 2030 green energy grid targets, we're going to need a substantial increase in the proportion of roofs carrying solar power. And obviously, we are active in both installation and ongoing services for that marketplace. So if I remind shareholders of the overall proposition we're trying to develop in our services business, there's a schematic of an estate agency, a business on the left and a home on the right there. In the business market, we are able now, I think, to bring quite a strong proposition to the marketplace, which is that we can install solar and, if desired, storage and electric vehicle charging. Solar power for businesses has a higher barrier to entry than domestic solar does. They are larger jobs which are inherently need greater attention to health and safety points. They need more complex work. The buyer is that much more sophisticated if it's some sort of facilities manager. So we're seeing a real sweet spot above 50 kilowatt and potentially even to 100 kilowatt plus systems for businesses. The second advantage we can bring there is that we are very experienced in buying exported power from small generators. So some of our newest customers are both installing with us and then selling their export to us as well. So we are seeing increased interest in commercial or business energy services to complement the home proposition which we have. We've talked about this on a couple of occasions now around our ability to provide both electric vehicle, solar storage and heat propositions, along with ongoing maintenance, export and import services. We are increasingly seeing customers becoming interested in our whole home capability, so coming to us for heat, but then also installing solar at the time, or getting an EV and then installing solar at the same time, which is something that is, I think, a very positive development for us. Here are a couple of examples which I'll bring to life in a few moments with the video, but you can see here both on the business and the commercial, on the domestic side, a couple of real examples. So Big Head are a manufacturer of fasteners for the clothing industry largely. They came to us through word of mouth to do a solar installation on their business park facility. We've done that. They're very happy with the bill savings they're getting, and actually they are now also a customer of ours for both energy supply and exporting any spare energy that they make. So they are big proponents of their payback they're getting from solar. Nicholas is a domestic consumer. He's actually a self-build consumer. Started the conversation with us on a heat pump and ended up doing a whole home job, including solar and storage, and has an ongoing relationship with us for supply and export. So obviously they're kind of premium examples, but we're expecting to see a bit more of this, which will, I think, have an economic advantage for us over the next year or so. There's some data there on the slide in terms of what we've seen so far this year. So we're seeing that Good Energy's existing customer base, particularly in supply and fit, are a reasonable source of leads for further solar installation. So about 18% of our solar installation sales have come from our existing customer base. We are seeing that solar install customers are buying heat pumps as well now. It's about a 1 in 10 addition there. And that 20% of our solar install customers have taken a service from us. So they are coming to us to buy their export power, for example, or coming on supply with us. So if I now hand over to you, Jake, there's a couple of videos which just bring these stories to life.
I think it's a no-brainer. Once you install it, you don't hear it, you don't see it, it works. It's just going on in the background, reducing your energy bills, improving the planet. What's not to like? I'm Matt Stevens, Managing Director of Big Head, and we make special fasteners for composite materials. I mean, solar energy is one of the cleanest sources of electricity I can imagine, and it's so simple. The solar team at Good Energy have been very responsive. They understand the technology, and then they explain the technology really clearly to us, because we're not the experts, they're the experts. The process was really easy. They came on site, they did the survey, and they just made it simple. The Good Energy solar team installed the solar array at the end of June 2023. And since that time, we've generated slightly over 20 megawatt hours of electricity. We've saved over £4,000 in our electricity bills, which is fantastic. So we'd expect to save double that over 12 months. Yeah, I get a kick out of things that work well. Quality. So it's great when a plan comes off, when a bit of engineering or design or technology solves a problem. I'm really worried about the climate crisis. It's real, and I think we need to stop exploiting nature and start looking after it. I think when you understand it emotionally, it's a very different level of understanding, and you really can't ignore it. Installing solar is easy, it's good for business, and it's good for the planet. And I really can't think of a reason not to do it.
So the first thing I did was I got solar panels, and I thought, right, I need to get an air source heat pump. We definitely save money because of it as well. So I just say to people, you are doing it for your environment, but actually if things continue to be as volatile as they have been over the next few years, you're actually giving yourself a bit of protection. If you can afford to, look at getting the panels, the battery, the heat pump in one go. So not only are you helping the environment, saving yourself money, you are future-proofing your household, and who doesn't want to do that, really?
Thank you, Jake. So a couple of videos to bring those examples to life there, really, of customers who we have worked with successfully in both the business and the domestic side of the business. So a lot of this sits on our ability to deploy new and exciting propositions that will particularly appeal to early adopter customers in these markets. And we've had, I think, a strong track record so far this year and an exciting pipeline still to come. So I would highlight our work for export customers, particularly fit customers. We remain the only supplier able to pay fit customers on the actual metered export that they provide. For nearly all fit customers, that is a net gain in the payment they will receive from us. It's not necessarily that substantial for an individual, but for anyone who's got a portfolio of fit sites, it can become a meaningful amount of money for very little additional work, just the work involved in switching fit sites to us. We're also increasingly trying to work in the market for people who missed out on the fit scheme, and we are now confident. We have the best export rate in the marketplace for people who actually install with us. So it is undoubtedly a loss leading rate, but we will pay up to 40 pence a kilowatt hour for exported electricity for somebody who has installed with us for the first year of their use of those panels. So some good innovation for exporters and solar customers. On the supply side, we continue to look for niche propositions that appeal to customers who are particularly environmentally aware or aware of adopting new technologies in the energy transition. We are signed and announced and about to go live with Ripple Energy, for example, which will allow people to part own actual generating assets and then see some dividend effectively through reduced bills, depending on the performance of those assets. On the services side, we are one of the few players who actually monitors heat pumps after they go in, which means that we can offer individualized winter tips to consumers about how to use them at the most efficient way possible whilst maintaining heat in the home. And then in terms of flexibility, which is very much the future trend we're excited by in terms of both greening the energy grid and saving people money, we have launched a new electric vehicle tariff, which is settled on a half-hourly basis as a time-of-use tariff that relies on smart metering and new systems there. And as we've touched on already, we have an industry-leading hourly matching product in the market for business customers. Where I'm expecting this to go, looking at a number of areas to enhance these propositions. So let's stay on flexibility. I think this winter, we will step outside from the national grid's early experiments in this area, which whilst they were exciting to see how consumers engage with them, weren't particularly high paying, and we'll be focusing on a flexibility offer for battery customers, which should offer meaningful savings through the winter, and a heat pump trial backed with some academic research, which again is focused on how can you most effectively use the heat pump whilst maintaining heat in the home. On the services side, we are exploring the sort of slightly more niche proposition of high temperature heat pumps for people who can't make changes to their existing home setup if necessary. We may well end up looking at financing options for heat pumps and certainly enhancements to those monitoring services for heat pumps. On the supply side, the ability to settle on a half-hourly basis opens the door to any number of tariffs aimed at people who are adopting green energy technology. So we currently have the cheapest off-peak electric vehicle tariff rate in the market. We're going to be following that up soon with rates for heat pump owners, for example. And then lastly, on the export side, after the innovation around payments, we're looking to improve our service level further to the FIT market by enhancing the way in which we can use mobile phone images to deliver accredited meter readings. I should touch also on ZapMap, into which we put some additional funds this year. ZapMap continues to maintain a very high penetration of the UK's electric vehicle market. So it reaches about 75%, we think, of the UK's EV park. Its download rate and its registered user number, particularly its active user numbers, have continued to keep pace with the growth of that vehicle park, despite the fact that we don't spend very much money on marketing there. We're seeing good levels of penetration in terms of particularly fast charging charge points being both on the maps and available through ZapPay. And I think the business lines I'm most pleased by the progress on is in terms of the insights business, so selling data based on driver behavior. That's now a proper digital product with mapping and other deep resources for people who need this. That is growing very nicely. We have 2 licensees who are licensing data from us. We're seeing a growing subscriber base using the more some of the more enhanced functionality, and Zapper in several conversations with some large and significant partners to help increase their speed to market. So ZapMap continues to be an exciting digital play and an exciting way for us to reach electric vehicle drivers. I should also touch on some very recent news, which is that Good Energy is now an accredited B Corp. So as you can see from the slide, and as I was confident in, our environmental founding roots, if you like, and the way in which we do business meant that we achieved a very high score through the B Labs accreditation process, comfortable of the 80 points you need for a B Lab score, and we're way above the median score in this marketplace. So the team I've worked very hard on this, and I know I'm very proud of our becoming a certified B Corp. We're one of the very few energy suppliers, and certainly the only domestic energy supplier with this accreditation. And we're both pleased by the stamp it gives in terms of our underlying purpose, but also the fact that it creates a commercial opportunity for us to be introduced to a number of B Corps and B Corp-minded consumers in the UK. I should note that to retain this for any period of time, we do need to adjust the Articles of Association of the company to reflect the B Corp triple bottom line lock, so people, planet and profit, which is really how we run the company anyway. That needs at least 75% of the shareholders who vote to support it. This resolution has failed at the last couple of AGMs, in part because it was a slightly hypothetical resolution. We didn't have the accreditation to really talk to. We have it now, and we would intend to return to a subsequent AGM to look for full shareholder support again for that resolution. So, in summary, you've heard from both of us here that we have begun the year in a strong and profitable way, and that we are maintaining our guidance for the full year. And we're doing that while investing considerably behind our new propositions in energy services, which will increasingly provide a whole greener home and business to our customers. We think the change of government is a net positive for good energy. We're seeing good progress in terms of integration. It's not an accident that we are showing a picture of one of our team there wearing Good Energy branded workwear. The business he works for is Good Energy Solar. The sales, the marketing, the finance operations are largely integrated already. And we are, I think, doing a lot to really cement our positioning within the UK energy market as the micro generation champion and specialist. And with that, Jake, I shall hand back to you and you can begin to run the Q&A.
Perfect, Nigel, Rupert, that's great. And thank you very much indeed for your presentation this afternoon. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab that's situated on the top right-hand corner of your screen. But just while the company take a few moments to review those questions that were submitted already, I'd just like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can all be accessed via your investor dashboard. Rupert, Nigel, as you can see there, we have received a number of questions throughout your presentation this afternoon, and thank you to all of those on the call for taking the time to submit their questions. But guys, at this point, if I may just hand back to you just to read out those questions and give your responses where it's appropriate to do so, and then I'll pick up from you at the end. Thank you.
Thank you, Jake. So I will take control of the mouse at this point and therefore call out the questions and try and divide them up between Rupert and myself. Alex's question is around the cash and cash equivalents number there of just shy of £40 million on the balance sheet at the half year. What are we going to do with the cash? Are there any specific investment areas, further acquisitions, R&D, and what are we prioritising? Rupert, do you want to sort of give that breakdown of how we look at that?
Yeah, of course. Yeah, so as you know, we've got a little under £40 million worth of gross cash. We still have a small amount of the legacy Good Energy bonds debt also on the balance sheet. That's about £5 million. So we think about the business as having around £30 to £35 million over the course of the second half of this year. At least half of that, having seen how the energy markets can and potentially might operate in the future, our first port of call is to ensure that we have sufficient working capital and sufficient risk capital to be able to operate in markets that can change at relatively short notice. There is a considerable amount of that capital, though, that we would consider available for use in terms of future investment. It's probably a little under half of that total capital of the sort of 30 to 35 million after the debt. And the things that we are continuing to actively consider, we touched on a little bit within the presentation. So we touched on a sort of real sweet spot around some of the wider services that we can support to sort of medium-sized commercial customers. The Big Head example was a great example of that. So potentially expanding our solar installation capability with a weighting towards commercial. Certainly considering the geographic reach of our existing installation businesses as well. We are very much focused on the south at the moment. So those are likely to be the sort of two routes for potential investment, along with some of the internal developments that Nigel highlighted in terms of our sort of 12-month forward pipeline in terms of propositions. But we are active in ensuring that we are utilising our capital both to run the business and to further grow the business.
Thank you, Rupert. So Paul asks if I can offer any insight into the reasons behind the share price hump around December and January at the turn of this year. So a couple of thoughts here. For the last couple of years, the board has argued that Good Energy is something of an undervalued business. A lot of chief executives will say that to their investors, obviously. But we've just been talking about the amount of cash we've got on the balance sheet. Our market cap is not much north of that. We managed to attract quite a lot of interest in that argument around that time, particularly from publications who sort of tip investors and shares in the small cap world, and we saw a significant amount of interest in that area, and that caused a ramping in the share price. It actually sort of drove towards where the target price from the two analysts who cover the stock actually is. So it was a big lift. It was actually more of a truing up of valuation terms to where somewhere approaching where we might expect to be. But there's a degree of volatility in small cap world, particularly there's a degree of illiquidity in the shares. And so that slightly waned away again after that initial run of excitement. But I do think the valuation argument still stands, and I know the board is very strong on that point of view. So that was the share price. Colin then asks, can we share more details about how recent acquisitions are integrating with the Good Energy brand and their contribution to overall profitability? So on sort of detailed financial analysis, we're actually about to change our segmental reporting when we do our interims next time to have a much clearer breakout of the services business. We need to do that obviously at a full year basis, so the comparator is more straightforward. It's a pretty early stage for that at the moment. What I would say is that of the three businesses we acquired, two of them are now fully branded as Good Energy. The management teams have either stepped away or are stepping away at the end of earn-out periods. We jointly manage all of our sales and our marketing and some of our other back office functions with those teams. So their headcount is more heavily focused on sales, surveys and installations. And we'll continue now to engage with the team in Kent to bring them along the same way. So by this time next year, these businesses should be fully integrated, fully branded as Good Energy and operating in a more efficient way as we've consolidated them. Paul offers congratulations on B Corp. Can we share anything on how you managed to circumvent the apparent opposition to this demonstrated by the significant obstructive shareholder, please? I'll take this one and then there'll be one for Rupert. So we don't particularly break out the results of any of our votes, but it's no secret to anyone who's been following our story for a while that we occasionally see difficult behaviour from Ecotricity, who are a competitor of ours as well as a shareholder. So what we've done is you can get the accreditation without the shareholder approval. You just need to go for shareholder approval to keep it within the course of the next 12 months. So we got the accreditation, as you can see, the score very clearly shows that. We will now engage both with the shareholder and also with the B Labs, who are the accrediting body, just to discuss that position. But I'm hopeful that it's a very positive badge of both our sustainability efforts and our environmental impact, and that we'll get a good level of shareholder support when we come back from it, which I suppose is not hypothetical anymore, it's real. So it's a genuine issue and one we'll be working on. Paul asked then on B Corp and the share price, long and short term. Well, B Corp certified businesses tend to grow faster and therefore offer better performance to shareholders than the peer set. What we are seeing is very early days is that we think its particular commercial benefit to us will be in the retention of staff who are keen on that status, but also in customer acquisition, particularly in business customer acquisition. B Corps tend to buy from B Corps, and we're the only domestic supplier with this certification. We're one of only two energy suppliers with this certification. We were headliners at a big event for B Corps in Oxford last week and got a lot of interest out of that. So I'm hoping it will help us pick up the right kind of motivated customers in the business space, and therefore over the long run that will be value enhancing for shareholders. So a question from Bridie here, shareholder and bondholder. I was customer on this SVT and £400 in credit. So one really around treatment of credit balances. Where are we overall? We've made Bridie, we should probably take your personal one offline and get the team to contact you. But where are we doing overall?
Yeah, no, I would agree. We'll take your specific query offline, but yeah, I mean, just in terms of the sort of the overall size of this. So the second half of last year, the total value of credit balances increased by about £7 million. So it went from about £7 million to £14 million, always less than the level of debit balances that our customers hold. However, we recognised that we had an unusual period within the energy markets. The prices were falling quite significantly and temperatures were warm, and consumers have been very careful of the levels of power and gas that they were consuming. So we have undertaken a proactive approach in the first 6 months of this year, and we have paid back £7 million to several thousand customers over that period of time. But in respect of your specific query, we're very happy to take that offline and see what your individual circumstances are.
Yeah, so we paid back 7 million of it. It's a normalised level. Let's look into your circumstances with the team. So a question from Jeremy, share of loss of associates, and what is that in the account? So can you explain that, please?
Yeah, so we hold 49.9% of ZapMap, and for a business where you typically hold less than 50%, it is classified as an associate. And for an associate, you effectively just record the single line item profit or loss before tax of that business. And so that is our share of the losses in ZapMap over the period. And we will continue to report it on that basis while we, and if we retain a ownership at less than 50%.
Thank you, Rupert. Question from Martin here on whether we're considering an energy as a service offering, either self-financing or with a third-party finance provider. So this, I think, really refers to a consumer trend where almost it becomes a bit more like the ownership of a mobile phone handset. So you sign up to a certain monthly payment, and then everything is kind of brought in, potentially including installation and management and maintenance of green energy technologies. That may well be where the market is going to. It's going to take a couple of years to get there. For now, we've always said, look, we are reaching relatively large homes, often with a bit more disposable income, and or businesses who can arrange their own financing or pay through cash. As I said in the presentation, we will begin now, I think, to look at simple financing options because the upfront costs of some of these technologies are pretty high. We'll go from there. If there's a good take-up, then we'd look into it. So it's not immediately on the roadmap, but we're aware of the proposition and it clearly has some interest to us. Question from Sam on B Corp. Do you have any reason to believe that Ecotricity would change their view on the resolution? I think eventually a lot of these are questions for Ecotricity rather than us. We'll make the case. We have professionally contacted them both in terms of in advance of those votes, and we'll do so again, willing to discuss the points. We'll have to see when we get to the next vote. Question from Andre. In the interim, you referred to fit sales and restructure to support maintaining growth. Can you detail the restructuring? Yes, it's really a restructuring of the fit sales team. We had quite a significant sales team. We've just seen we've seen a bit of change in that team, a reduction slightly in headcount, and just a structuring in terms of different numbers of accounts per person. So really, a lot of those relationships have maybe been a bit quiet for too long. So we've kind of been through the full list, if you like, and reallocated our sales coverage of them, and also shaken out one or two meters that shouldn't have been in the count in the first place. It means we've got now a kind of a better handle on the entire portfolio. And as we look to bring in new fit customers, and we're actively marketing for people to bring their fit portfolios to us now, we're better set up to sort of take those in fairly seamlessly. Question from David. Would we, which is great work again on this half, thank you. The energy market has certainly been a challenge for the Good Energy team over the last few years, and I would add my thanks to them as we go through these questions. Would the team consider buying back the equity owned by Ecotricity, either full or in part, as part of the continuing, in the light of the lack of support, such as for B Corp and the AGM? So we haven't particularly considered a buyback. I mean, I think the trouble with anything like that targeted at one shareholder is the maxim we've always operated as a company, as a board, is that we're running the business in the interests of all shareholders, and therefore things we were to offer would have to be for all shareholders. And we aren't particularly looking at buybacks at the moment because, as you've heard from us, if you've seen us before on capital allocation policy, we are investing for growth, and therefore buybacks aren't particularly a use of capital we want to look at the moment. So I understand the question and the rationale behind it, but no, it's not something we're particularly looking at. Question from Nick: do you come across the issue of weight of solar when dealing with particularly business warehouses or older buildings? So a technical question. I haven't had too many conversations with the team on this. I understand. I know where this is coming from, because innovation in actual solar panels is not particularly impressive. There is a sort of general curve of increasing productivity of the panels, but they still have weight. And therefore there will be, particularly I suspect, business premises where adding panels to the roof is a difficult thing to do. There is quite a lot of innovation in terms of the mounting, the weight of the mountings, the ability to then maintain them. So we are fairly confident that we can put solar on quite a lot of the sort of standard business park, quite flat roofs. You saw that in the Big Head example in the presentation, for example. And so in terms of the reports we get on kind of reasons for lost sales, structural considerations around weight haven't particularly factored in the people we've spoken to so far. Might we use some of the cash from Sam to increase our stake in ZAP above 50% as a use of cash? Do you want any general remarks on that?
I mean, I think the money that we are putting into ZapMap at the moment is focused upon the UK business and the build out of the revenue streams in order to take that business to a sort of break-even point as we go through 2025. At the moment, that money is being put in the form of a convertible loan. So you would argue that we are using some of our cash to support the ZapMap business, but under a slightly different investment structure than purely buying back a proportion of the equity that we don't yet have, that we don't currently have. Sorry.
Nigel, Rupert, if I may just jump back in there, and thank you very much indeed for being so generous of your time then addressing all of those questions that came in from investors this afternoon. And of course, if there are any further questions that do come through, we'll make these available to you immediately after the presentation has ended, just for you to review, to then add any additional responses, of course, where it's appropriate to do so. And we'll publish all those responses out on the platform. But Nigel, perhaps before really just looking to redirect those on the call to provide you with their feedback, which I know is particularly important to yourself and the company, if I could please just ask you for a few closing comments to wrap up with, that would be great.
Well, first off, can I start by thanking everyone for their time this afternoon? I'm sure everyone has busy lives and significant investments or other interests to follow. So thank you for giving us an hour of it to explain the company's progress. I would sort of lean back to where we started, really, which is that after an extraordinarily volatile couple of years in the energy market, we are seeing some sort of normalization, regrettably at higher prices. And within that, we are operating the business well and profitably, but also investing towards what we think is a significant opportunity and a vital shift for the UK if we are to get anywhere near the climate goals. I think what's changed is that we're gathering pace in terms of that move into energy services, gathering experience, and that we have, on balance, a more supportive government in office, which will help us with that. So I thank you for your support and interest, and I think Good Energy has a very meaningful role really to play in terms of the UK's energy transition, and we are increasingly well set up to do that.
Perfect. Nigel, that's great. And thank you once again for updating investors this afternoon. Could I please ask investors not to close this session, as you'll now be automatically redirected for the opportunity to provide your feedback in order that the management team can really better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Good Energy Group PLC, we would like to thank you for attending today's presentation. That now concludes today's session, so good afternoon to you all.